Markets slide as tariff threat rattles investors and drags down tech and industrials. Wall Street sold off after the White House floated sweeping new tariffs on Chinese imports, with technology and industrial shares leading declines. The prospect of higher input costs and disrupted supply chains sent investors into defensive positions. Index trackers reported broad weakness across sectors tied to hardware, semiconductors, and advanced manufacturing. Traders said the initial reaction reflected uncertainty more than hard data. But the move showed how sensitive markets remain to trade headlines. Bond yields moved unevenly as haven flows pushed into short-term government debt, while inflation expectations nudged higher on the chance of tariff-driven price pressures. Currency desks reported a bid for the dollar early, then a mixed tone as investors weighed growth risks. Strategists said companies most dependent on specialized magnets and components could face short-term margin squeezes if sourcing costs jump. Some firms may pass through expenses to customers, potentially testing demand into the holiday season. Portfolio managers recommended a focus on balance sheet quality and pricing power until policy signals are clearer. Corporate treasurers, meanwhile, were said to be modeling alternate supply routes and considering inventory cushions to avoid production halts. The administration framed the volatility as a necessary price to ensure long-term security in critical technologies. It argued that a short shock now is better than chronic vulnerability later. Critics countered that a blanket approach risks harming American manufacturers and consumers. Attention now turns to whether the White House releases a product list or a tariff rate schedule. Any sign of a phased or targeted implementation could calm nerves. Until then, traders say headlines will drive intraday swings as the market gropes for a new equilibrium.